Hello, Jim Jacobsen with Windermere Real Estate in Seattle, Washington, and I'm a managing broker here. Question comes up, what are the financial measures of flipping houses? And I'm going to break this into a couple of parts, but number one, the flipper, if you will, the person who's going to buy the property and then purchase to resell, is going to have sat down with their CPA, found out the tax implications of what takes place in them flipping on a short-term basis. And not being specific, but there's a good chance it might become short-term capital gain, which in turn becomes ordinary income. So a flipper, really, it's a job. And a flipper is going to have to buy a property at a good value to them, well under market value, and or market value in its present condition, and how much is it going to cost them to fix the house and remarket it, what costs are incurred. So number one, when you buy the property, you're going to have normal buying costs. If you're paying cash, then you're just going to pay your escrow and your title insurance, etc. Pretty minimal. But a lot of times you're going to use what they call hard money, which is money that's going to be at a higher interest rate. So the time frame of you purchasing, fixing, and selling are of vital importance because you're paying money out on the mortgage on a monthly basis, and especially if it's hard money. So the rates might be 4% today, but the hard money might be at 8 or 10%. It's a risk loan because you don't know the future. Now the flipper comes in, they already know what their cost to do the improvements will be, but it's going to be the cost of the original purchase, the cost of materials and labor, the cost of selling the property, and the cost of time management of the money. In other words, how much time is it going to take for us to fix and market this property? So there's a lot that goes into flipping, but it's also going to be very lucrative if you've done right and done by professionals.